Hello guys, welcome to my channel again. In this video again, we are going to be doing top-down analysis on some pairs, and then we'll see what the market has done in the previous weeks and see what the market is preparing to do in the next coming week. So, but before we go into the analysis, the reason why I stopped, because someone asked me why do I stop, why am I not dropping video? The reason why I stop is, as a swing trader, I don't need to be doing analysis every day. I've already known where the market is going overall, or I've already had my analysis towards my bias, and all I need to do is to just wait for market to play towards that direction. So that's just it. So when I see something that is important or maybe market change, that's when I update the analysis. So that's it for that. So without wasting time, let's dive into the analysis. So the first pair we're going to look out for is because I'm analyzing the major pair, few major pairs. So it will be important to see what the XY is doing. Though I don't normally do this because I don't really care. I only face what the particular pair and what the chart is talking to me about or what they are showing me. So I don't do this kind of correlation of a thing, but sometimes it's important for people to actually know this. So let's see what DXY is doing, and we'll start the analysis for monthly time frame. You can see it has been mapped. So the process still remains the same. In case you don't know what the process is all about, it still remains the same. So what we are looking for is the structure, and the structure is like the kind of pattern that give us the overall directional bias. Then inside the structure, then we can now take advantage of that the same bias. So for example, if the market is showing us impulse correction, like impulse correction, this is not a structure for us. For us to confirm a structure that market is actually going here, we need a pullback to take at least one of these, then market push up again, then close above. So once we confirm this pullback means that market has taken liquidity. So we can be rest assured that this low is going to be protected. Sorry, this low is going to be protected. Then within this range, we can look for our buy continuation, join this movement. So probably we wait for the same process, maybe market mitigates the extreme, then we can continue. So all we want to do is to know where the market is likely to be protected. So and if we continue, this low will be protected and the process remain the same. So once you know where the market is going to protect, then you can wait patiently for that pullback to happen, join the trade somewhere here, put your stop loss there, then take your profit at this height. So that's just how the whole process is all about. And it's not limited to any time frame, but the higher the time frame, the clearer the structure become. In the lower time frame, there are a lot of noise, so you should be aware of that. So so in DXY, you can see the same process repeat itself. So market change character here, this level, market change character because we were bearish before. You can see we were bearish, now we are looking bullish. And you can see after market change character here, after we had change of character here, market pullback, push up, then take out this low, then market close above. You can see that's the structure. And in the attempt, we are trying to look for buy, expecting this market to pull back and continue. But based on the market behavior, we had a change of character here, and it told us that means we had a change of character here, and it means the market might be looking for temporary or long time sell off. And you can see after we had change of character here, bias has changed from buy to sell. The market came back for this, mitigate something around here. Remember this monthly time frame, so you are not expected to trade the monthly time frame, but we just give you the overview of what the market is doing in higher time frame. So if you start selling from here, before the market gets to this place, you will have made some money. Then if market, then we can see that market refused to break this level, so and market push up again. So that's why we had another change of character. It's normal for you to have double change of character. So it's just like some people will call it ranging. Market can give you something like this. You want to buy from here, market will still do something like this. That's change of character. Then you want to say, okay, I want to sell, market will do another one. So it doesn't matter. This is a game of probability, and all we care about is the pattern. It's not about being wrong or being right. So once we follow the pattern carefully, we know that in a long time we are going to be profitable. So, and you can see we had another change of character to the upside, which means that market still need more bullish momentum. So now in this case, this is our high that the market, this is our break of structure, and market came back for this. If you can look clearly, market came back for this inducement because this is the last value pullback that the market did. If you don't know how I pick my value pullback, I have the video on it. Push up, then market pullback, then continue. So you have to wait for market to take out this low before you start looking for your POIs. And immediately market took out that low, we have to mark our POIs. And what's the criteria of the POIs? It must be value pullback and market must do what? Market must have fair value gaps. So you can see there are fair value gaps there, there are fair value gaps there. So that's why we say, okay, the market is responding to this other block. So, and if this fail, the market will respond to this one. So that's this one. So this is a monthly time frame. If in monthly time frame, this is like what we are expecting. In monthly time frame, we want to see something like this and mitigation of this, then continuation. And if it fail, then we are expecting market to come here and continue. The structure still remain intact. So what are we going to do when we add this? We are going to go to 24 hours. We can go to daily time frame and then see what the daily time frame is doing here. Maybe it's going to support what the higher time frame is also doing. So let's check what the daily time frame is doing. I think my network is a bit slow, probably hanging. So let's check what this is doing. Just have a little patience. Let me check it. Okay, it has been disconnected. Okay, it's reconnecting. Sorry about that. Okay, so let's see what the daily time frame is doing. What we want to see in daily time frame is change of character, and let's see if the market actually did that. You can see the market was bearish selling, and when we got to this place, this was the last structure that the market did for us. Last structure. Why? Because market came back for this inducement, mitigate something here like this, and drop. But this drop was not valid because it did not close below this structure. So some people use this as valid, but based on my plan, I don't want to see it. I don't consider it a valid break of structure. So, and market went back because when this happened, two things is likely going to happen. It's either market wants to change character by pulling back, or market wants more deeper liquidity. So, or market wants to do the same thing it did, a liquidity sweep. It will do it at this top and it will drop. So, and as you can see, this is exactly what the market did. Market sweep this low, then come back from this high and sweep this liquidity, the market systematically drops. So then we can say we had break of structure here in terms of daily time frame, and we are expecting this high to be protected. You can see this high we are expecting to be protected, and the same process repeats until market took it out. So how will you know? If you look at it closely, market close above this level. It's not, we are not expecting it to close if the same momentum want to continue, but for the fact that we are responding through this higher time frame POI, you can see that market is also responding in daily time frame towards that direction. So you can see that we had a change of character here, and if we had a change of character, what are we expecting to do? What we need to do is to look for our inducements, and you can see market created inducements. After change of character, market pull back, then give us another move. So this level serve as our liquidity point. We are not expecting to buy anything above that level. So, and after we market took out this level, we have to mark our POIs. POIs must be a valid pullback and it must be associated with imbalance. You can see, and if you come down, I told you we only have two POIs that is high, that is the market mostly respected, not all POIs. So, and if you can come down, and those POI must have characteristics. The first one is the POI that is rest below inducement, that is next to your inducement, and the POI that is probably at the extreme. And if you look at it, we do not have any extreme other block, and no valid other block at the extreme. It doesn't mean market cannot come here, because this is the point that market start buying. So it doesn't mean, but based on the plan, we are not expecting the market to come here, or any other thing that the market can do is for the market to invalidate this level and come and sweep this low to get proper more liquidity. Then market can continue its own way or have a change of character again. So, but we are not assuming, we follow what exactly the market is doing. So it's not our job to assume or uh, to to predict what the market is doing. It's for us to look at the chart, see what the chart is telling us, and act when the market acts. So that's just it. Most especially follow the plan. So market will provide you a lot of noise, a lot of indecision, a lot of emotional stress, but yours is to just look at your playbook and just do exactly what your plan says. So the rest will be sorted out. So and you can see when we got to this level, market start reacting. So it shows that we are expecting DXY, dollar index is expected to continue pushing up till we add break of structure here, and this will serve as our low. Then the process will continue. So the entry is all about you coming to this level and go to your lower time frame, because you are also not expected to trade. Remember, you are refining it from higher time frame to lower time frame, so you are not even expected to trade strictly direct from daily. So probably when the market mitigate this level, you can go to 4 hours or your lower time frame or your 1 hour to go and look for your entry. And the way I will look for this entry is this: if the way I trade, because when the market is coming like this, I want to see the market mitigate this level. And once market mitigate this level, the last pullback that the market created can be my change of character, because I want to engage in this trade because the higher time frame have been mitigated and I need to refine it. And immediately that's happened, I will look for inducement, I will look for my first POI, then I will look for my extreme POI. This is my hidden POI. So, and as you can see, if I try to buy here, probably I will be lucky because my stop loss will be here. Maybe I will be targeting this high and the market stop at less than 1 to 3. But I know I will manage this trade because this is a decisional POI, and if the market move a little bit, it's expected of me to break even because it's a kind of little lower probability compared to the extreme. And I will position again for this one, so keep my stop loss below this higher time frame order block. So then I'll target this high, probably 1 to 3. You can see how nicely the market play around, and you can see that market finally giving. So this will be the first trade that will execute on this trade. And because it looks so easy because I understand the directional bias and how I can jump in. So you can see after market did this break of structure in 4 hours, this will serve as my low. This level will serve as my low. This level is going to serve as my low. Then I will do what? I will wait for market to come and take out inducement. And this is the first inducement point. But because market do not close above here, so this level, this low that I created will also be an inducement. And I will be waiting for here for this other block to play out. I'll be waiting for here because this is another block. So in this case, I'm going to miss this trade. This is the first other block I'll be preparing the market to come and mitigate. So, and you can see market do its things and finally blow to the upside. So, but I'll be expecting this the first entry, and if that one fail, I will be expecting this at the extreme. So this is the clear case of a missed trade. So I'm okay with missing the trade, you can see. So if this one fail, then this one is likely going to hold. So that's this for DXY. And then now that we have DSY being bullish and being strong, it means that you should expect AUD, Euro USD, all the other pairs like AUD, Euro USD, GDP USD, and probably AUD USD to be bearish and USDJPY to be bullish. So those are the things you should be expecting because of the strength of DXY. So let's go to GDP USD. I don't want this video to be too long. So GBP USD is kind of complicated, but I was still able to navigate it, and what I was expecting is exactly what is playing out. So I don't want to go to monthly time frame because I've done the analysis of monthly time frame before. So we can just work on what the daily is telling us. You can see daily is giving us if we want to start from here, from this level, the process still remains the same. You can see market is bullish like this. So all we need to do is to look at where the last structure that the daily created, which is this one. Why is it so? Because it came back for this liquidity point and push up. So we're expecting this low to be maintained. And you can see market do its thing, the same thing, and finally we had change of character in this low. So, and I remember I said it's normal for us to have double change of character because you can't control the market. And in this case, you can see that market came back for this liquidity point. This is the minor, this is the major liquidity point. So, but we can use this, and we're expecting to sell from here, first attempt, the extreme, and probably this place. This place, if we have a fair value gap here, but I don't think we have. And you can see market invalidate this trade. So we had a change of character to the upside in this case. So it means market still want to do its thing. And what are we expecting? Now that we have change of character, we have to expect the market to follow the same process and start looking for buy. Remember, this is daily time frame. So when market gets to daily time frame POI, that's when we can go to lower time frame and buy towards that direction. So, but what I see is that after market created this, we had an inducement here. And this is the only POI. But mere looking at it, market respected this POI. First attempt and second attempt, market start pushing up. But this first attempt is supposed to be able to push the market to the upside. But me seeing this thing and seeing what DSY is doing, I knew that this POI is likely going to fail. And if this POI fails, there is no valid other block below that can push the POIs to the market to the upside. So we are likely going to have this low to be weak. The market is likely going to come and take this low. But based on that, I don't really want to care about what this is doing. All I want to do is, because if this market is going to come down to this low, if we are going to see something from here to this low, there are things that you are going to see, and there is a way you are supposed to think. Look at it. Let's assume now that I'm looking at it, first thing that will give me confirmation is that if I go to lower time frame, market will not have the capacity to push up, and it means that in lower time frame, when the lower time frame structure fail, there is a sign that market is coming down. Maybe 1 hour or 4 hours. That's the sign that the market is likely going to come back. So, and the other thing I do that I pay attention to, and I said, okay, let's assume that I was talking to myself when I was analyzing this. Okay, let me assume that this POI has already failed. Where is the market likely going to pull back? Where is the market this move? Where is it going to stop like this and continue to the upside? Because market don't just move. Why the market move is its target liquidity, target fair value gap. So where is the liquidity and where is the fair value gap that can push this market to the downside? So I start classifying this high as my inducements. Then I look at it, where is the other block? And I notice that we have a daily other block resting here, and it's associated with fair value gap. So I was expecting this level to hold. So, but to be honest, I didn't engage in this trade when market is doing all these things. So all I did was to go to 4 hours and want 4 hours to change the character for me to confirm that what I was anticipating here is actually correct. So, and if you look at it, where is the last 4 hour structure? Then you can see that this is the last 4 hours break of structure that we had. Why is it so? It's because this market took out liquidity below here. So this is the liquidity that the market took out and probably mitigated fair value gap or something and blow up. So we're expecting this low in 4 hours to be protected. And if you also check it in 1 hour, it's still the same thing. So immediately markets change character in 4 hours after mitigating this particular POIs that I'm also watching. This confirmed to me that this GDP USD is likely going to start selling and currently maybe coming to take out this low. So, but you know, I have to follow my plan. I don't need to just assume. So immediately I see this, all I did was we had a change of character, and I look at my account. I say, okay, I have some money I can risk to confirm maybe my bias is also correct. So I pick out little amounts of instead of risking 1%, I risk 0.5% on this trade because I'll consider this. This is now going to be my inducement. Then this is going to be my POIs, decisional POI, and this is going to be my extreme to the sell side. So, and why is it valid? You can see fair value gap. You can see fair value gap. So all I did was to no extra confirmation, put my stop loss above here, then target this low. So this is what I was expecting for GU to do, but it took little time. You can see it gave me very good move to the downside, which is about almost that's around 1 to 2. But typical mean, remember I said this is we are operating from decisional POI. So all I did was I moved my stop loss to break even, and you can see market almost eats me out at break even, and then market start dumping. So that's how I execute my GU um, in the last previous week, and I was patient waiting for market to actually react to what we're seeing. So going forward, if the market wake up by next week, if you had a break of structure to this down, it means that this high will be protected, and I will expect the same process to continue. Let's say we had this like this. All I need to do is to come back for here and sell, because that's exactly what the market is doing. So my entry time frame confirmation, my entry model also valid because I'm following the plan. This is my plan. This is how exactly I engage in the market. And in this scenario, if this fail, then I will wait for here again to sell. So I know that if I lose 1% here, I can make about 3% or 4% here. But so which is a win-win for me. And if it fails, I will only be down by 2%. So that's exactly what I'll be expecting from GU looking forward. So the next pair is let's go to Euro USD. Euro USD is also clear enough. Euro USD. So this is Euro USD, and we'll do the analysis again from daily time frame because I've done this on monthly. If you look at it, I've done this on monthly, the same process. I said if this holds, then in the next throughout this year, Euro USD is likely to be dumping. But you know, it's just an analysis. I'm not the market maker, so it's what I see on the market that I'm actually reacting to. So you can see market is reacting from monthly POIs. So what are we going to do? We go to daily POIs and go and see what the daily POIs is doing. And as you can see, break of structure here, market change character here. So it means that this POIs market is already responding to it in daily time frame. And what are we supposed to do? We are supposed to change of character. Our daily inducement will be here. Then this is going to be our POIs. If you look above here, there is no POIs above here. So, but market can easily come to this hub, either sweep this high or probably mitigate this extreme, because this is where the sell side starts. So but according to the plan, I do not have anything here. So if market failed this low, this high, this POI, sorry, if market failed this POI like this, if market, let's say market failed this POI like this, before I can engage in this market, I want market to sweep this high, then give me confirmation, then I will start selling. So that's exactly, but you can see that market got to our daily POI and started behaving exactly what we want him to behave. So you can see, but there's one thing to know the direction, there is another thing to be able to, to be able to catch the moves. So in my first attempt, I explained in my previous video, I used 1 hour time frame, and 1 hour time frame entry gave me break even because of this move. So now I went to 4 hours. If I had used 4 hours, what would have been the result? And I discovered the market is actually responding to 4 hours time frame. So in this case, this will serve as our 4 hours change of character. And what are we going to expect? We want the market to take out this 4 hours inducement, this 4 hours inducement, and market mitigates something here and drop. But the concern is this drop do not close below. So, and I was like, what is actually happening here? And if it doesn't close below, it means the inducement will be here. Then decisional POI will be shifted to this level, and then probably the extreme will be here, somewhere around here. So this other block seems to be valid. Let me check. Yes, you can see this other block is valid. It's not mitigated. So this is exactly what the market did, but I had a break even here. So, and market come back to close below here. So I said, okay, that's fine. I can wait patiently. Market has already confirmed this higher time frame, this daily time frame um, direction for me. So this is going to be like 4 hours change of character and 4 hours break of structure. So what am I supposed to look out for? My work is to look out for 4 hours inducements, and as you can see, this is exactly what I was able to pick because this is a value pullback. And you can see market swept it out and drop. I don't take inducement sweep. So it was kind of, I was expecting the market to actually push up to this level, to at least this level or this order flow. I was expecting the market to push up, even if it doesn't want to get to this upside, then it will give me a sell. But market are stuck here. Market are stuck here, sweep this inducement, and so, and this is also a complete structure because inducement was taken out. So now that we had that, I was expecting this high to be swept, but market push up and push down, so it gave me liquidity here. I say okay, that will be fine, and I'm expecting that once we have liquidity here like this, market is expected to take out this inducement. Maybe this is a hidden POIs, so I'm expecting the market to stop at this level and then start dropping and come and break this structure here because this is going to be our structure low. So, but I observed that when I execute a trade here, market was unable to give me good results because I was skeptical. It's not up to, I think yes, this I was not on it when market mitigate this level. So I think I join it this place and put my stop loss around here. And then I was looking for 1 to 3. You can see I was even confident that market will break this level. I was looking for 1 to 3, but almost to my TP, and now I've already break even. So almost to my TP, market went back and also gave me the same result, break even. And not even that the market gave me break even, market actually closed above here. So this left me into confusion that what is exactly market want to do. Not that I was really confused, but I was expecting market to just sweep this high and drop. So all I need to do, to be honest, was that I stay away from this market because all my criteria was not met. I was just looking what the market is doing. And the next thing I did was I just went to the higher time frame and I see, oh, market actually did daily inducement sweep. So, but I was not confident because I'm still looking at somewhere around here. And I see the market mitigate this fair value gap, but I will be preferred it if the market mitigates this other block. Then I will go to probably 1 hour and start looking for sell again. But this is what the market did. So, and I stay away. I don't want to engage in this market. In fact, I thought this, I was looking at this a change of character because this is already change of character for me in 4 hours. So there's no point in buying, in looking for buying when I'm already, the higher time frame is telling me sell and the 4 hours or lower time frame is telling me buy. So there's no point in buy. I follow what the higher time frame do. So I would rather prepare for this change of character to happen. Then I will now be assured going forward, this is going to be the situation of this Euro USD. I will expect the market to probably push down like this, push down, then maybe come back, then drop. Or I will expect the market to create inducement here, then come to these POIs like this, then we start looking for sell opportunity. So that's exactly what Euro USD is telling me, and that's exactly what I will be doing. on Euro USD going forward. So, and remember the first level target, the higher time frame first level target is daily break of structure. And once we have daily break of structure, the process continues. So don't get it twisted, don't get it confused. This is exactly what I'm expecting on Euro USD. Going forward, maybe next week, I want to see a pullback that will come to this order flow, then I will dump it, put my stop loss above here. So the next pair we're going to look out for is Usdjpy. Let's check what Usdjpy is actually doing. Remember, I said Usdjpy is expected to be buying. So, and if you understand the analysis, in fact, you will just stress less. You will be stressing yourself very less. Let me check what it's doing on monthly time frame. I've done the analysis on monthly time frame. You can see monthly time frame break of structure, inducement, monthly time frame, market sweep the inducement, and push up. So we're expecting this high to be taken out in monthly time frame. And going straight to daily time frame, what is market doing? Remember, we are not looking for sell, we are looking for buy. Even if you're looking for sell in daily time frame, we should know that it's temporary. So we'll trade carefully with that. So this is exactly what daily is doing. You can see we had daily inducement here. The market came back for it, mitigate something here, and push. Then it gave us what? It gave us break of structure. We had break of structure here. So it means that this low must be protected. And what is market doing here? Market was just ranging and creating liquidity. Sure, you understand? It was just ranging. So market to go above here, no inducements were taken. It means that liquidity is resting below here. So anything above here, we are not taking trade. So, and after market took out this level as our liquidity point, as our inducement point, then what are we going to look for again? Look for value pullback and look for fair value gap that is associated with it. You can see this is a value pullback. This other block is a value pullback. And where is the fair value gap? You can see fair value gap is associated with it. And the same thing here, this is the first one which I call decisional, and this is the last other block that the market created. Look in between, there's also a fair value gap in between. So, but look at it, market on daily time frame, immediately market mitigate this level. You should be wondering that why is it that whenever markets push up and it must come back for inducement and so on. That's how the market move most of the time. That's how the algorithm operates. I'm not saying all the time, but most of the time. And that's most of the time is actually what we are capitalizing on. And it doesn't matter whether it's higher time frame, monthly, weekly, or it's just the pattern show up every time in every time frame, in all time frame. So now that we have this daily time frame mitigated, all you need to do is to just go straight to 4 hours and have the patience, 4 hours or 1 hour, and start looking for what the market is doing, like your entry your entry criteria or your entry pattern. So, and what's our entry pattern? It's still the same thing. In this case now, it's not clear. You can see market push up, and so this day you just wait for markets. You can follow up with the market and have patience. Although I missed like two setup on this move, and you can see market was systematically pushing up. The same process every day, every time. That's exactly what the market is doing. You can see from this level, market sweep this high, come back for this liquidity point. Look at this, come back for it because this low must be protected. Market push up after taking out this liquidity because this move is an attempt to come and take liquidity. So you can see market mitigate something here. This is not the valid order block for me, but we know that this low must be protected. And you can see 75% pullback. You are good to take the trade. That's all. So sometimes you just need to be patient and follow the process. You can see you are not expected to pick all the pattern or all the trade because market is not going to settle you alone. Sometimes you just have to be patient and wait for your own pattern to show up. So, and that's exactly what I've learned to do in this market. So you can see in this place, inducement, then where is the market? No liquidity, no liquidity. I was waiting here for market to come and mitigate this other block. And you can see I missed this entry and boom, market push up. So it's a normal thing for you to miss trade. What is important is you following your plan. You can see this is another one. Market push up, and I mark this as my liquidity point. As my liquidity point, this level, decisional POI, and I'm expecting markets either to come and mitigate something. I think I was very greedy with my entry. I put my entry here. Okay, I was using this order flow. I think I was using this order flow somewhere around here. This order flow. Yes, I remember. I was using this order flow. This one. Because I know this low must be protected. This low must be protected. So I was using this order flow, waiting for market to mitigate here with my order, with my limit order, target this high, and you can see market flash down and do not pick me up. So those are the things. It's normal in the markets. You have to miss the trade. sometimes you miss trade and so on. So that's exactly what but I was not really enjoying what USDJPY has been doing because of all this spike. I'm not interested. This spike is supposed to be an advantage, but you know, for me, it's not serving me. So, but I don't have problem with it since I have another pair that I can focus on. So this is exactly what this USDJPY is doing. You can see after market break this low, come back for this tiny pullback, and you see this. If you can use 75 or 60% pullback, you catch this trade. Market break above here. This is the liquidity point because this is the last low that the market did. If you want to see it, this is the last low before market break this high. And market came back for it, knowing that this low must be protected. So you can see, so even if you still use 75% pullback or 60% pullback on this trade, on this, you can see market still come back for it. So those are just the how the market behave, and it's a very nice pattern. The way we approach the market is more reliable and is it delivers. It's more reliable and realistic. So that's it. GDP. Let me see what we are looking for going forward on USD JPY. The the structure is kind of not direct, but we can still work with it. You can see we just need to figure out where is our low, where is our high. As it is now, this still remain our low because this still remain our inducement. Until market push up like this, then this will serve as our inducement. Then this low will remain the same. Probably maybe market will push down. Then so or market will do this and push up, but this low will be protected. These are break of structure, and we expect the market to come and break this structure. So that's it for USDJPY. The last one I will look into is just S&P 500. SPY 500. Let me check this. US 500 or S&P 500. Anyone is what we will look out for. So you can see this is also a very good pair that I can recommend for anybody to trade because it's always trending. So, and the process remained the same. So market was giving us higher low. Look at it. Break of structure, inducement taken out, low protected, inducement mitigation. This is daily time frame, break above. You can see market coil up, liquidity, decisional. Market supposed to mitigate this level and push up and change character. Remember, it's a trending pair, and immediately change of character happen. The same thing have to happen and market change character again to the upside. So all this is just what the market behavior. So if you go to maybe lower time frame, you will still see some moves that market, the opportunity that market will create for you. So I had a trade on this one. The last time I had a trade on this setup, I was expecting I also had a trade here, but end up in break even. So you can see market break structure here, DXY, market break structure, liquidity here, other block here. Other block failed, but market came for extreme liquidity. And immediately I see this, I know that we are going up. Then after this movement, I engage in this trade. So it's not that difficult. Just understand the concept. I got 1 to 2.7 here, almost 1 to 3. So, and the process remains the same. You can use 4 hours, 1 hour, anyone that is clear to you. As long as you follow the same pattern, you can see that market will actually serve you well. So this is 1 hour time frame. So, but why sometimes I prefer 4 hours is that the 1 hour time frame will be too cloudy for me. So in this case, how do I engage in this trade? I only wait for inducement because I see the market find it difficult to push up. So this serves as our inducement, and I was expecting the market to respect this other block, and I try to buy here using lower time frame confirmation, I think, but I was targeting here. So, but because immediately market move to this level, it's going to be very stupid of me to have this maybe above 1 to 2 and still expect the market to come and take out my money. So I only lock in my trade, and when I came back, I see that this has happened. So this is exactly how I engage. So, but in this case, if you have something like this, automatically it doesn't mean that markets want to continue selling. Remember, this lower time frame, 4 hours time frame. You can go back to daily time frame and see what the daily time frame structure is doing. Because if the 4 hours time frame fail, the next time frame that is likely going to fail if the market want to continue in that direction is daily. And if the daily do not fail, then it means that daily can hold the market and continue. You can see market is trending here inside the daily order block. This low have to be protected. You can see, so this is the last break of structure that the market did. Valid break of structure. Why? Because it sweep this inducement low and market push up. So for us to now say we are officially in bearish momentum, market want to do temporary on long time pullback, we have to do what? We have to wait for market to clear out this low. So if the market clear out this low, then we can temporarily start selling, looking for sell momentum to the downside. And you can see market has aggressively pushed up from this move. So it's expected for market to do at least, let's say 50% pullback like this, at least to this level before it continue. But we are not going to do what we feel. We do what the market is giving us. So in daily time frame, if the market drop below here and probably give us more inducement, we wait for market to come to this level and we risk again and start selling. So until this process fail, if the process fail, then we know that market has resumed its bullish momentum. So if you have something like this and market change character here, then we can start looking for buy to the upside. So, and that's exactly what I'm expecting on on US 500. You can call it S&P 500, so whichever one. So I think we had a clear analysis and clean analysis for this week. If you have any question, you can drop it in the comment section. I will attend to it. And if there's anything that is not clear to you, you can easily let me know. I intentionally make this strategy to be simple and direct because I watch a lot of SMC concept. I see that we are almost doing the same thing, but the build up, the talk, the explanation around things is too much. So, and the more it is, the confused you can easily get. So, the step, if I want to look at let me say summarize all these things we are talking about. The first step is look for daily structure. That's all to be complete. Once you have daily structure complete, then mark the low. Then look for your inducement. Let's say you have your inducement like this. Then now you know that your inducement will validate your high. If the market come below here, it means that this is your high. Then this is your low. Then you wait for your, let's say you have other block here, one other block and the second other block here. Remember, we only deal with two other blocks. If market gets to this level, go to 1 hour, look for your entry confirmation. You can use any entry confirmation as long as you are trading from here. But in 1 hour, this is your higher time frame POI. If 1 hour comes down like this, or you and mitigate this level, all you need to do is use this as your change of character, because you are using this because market has already mitigated higher time frame POI. Then wait for inducements. Allow the market to come here. Then buy to the upside. Put your stop loss below here. So it's very simple. And you can also use another way. You can do it like this. Allow the market to come here. Mitigate this level. Change its character. Once you have change of character, you can look for fair value gap in between. Position there if you don't even want to use other block. But keep your stop loss below here. Then boom to the upside. But you also have the responsibility of managing this trade. Remember, this is a daily decisional POI. Markets can give you reaction and still fail and come down to this. So you have the obligation to manage your trade. If you have maybe 1 to 2, you can lock in the profit, or depending on how you make your plan to be. So, but this is also high probability. Market get to this level, do the same thing in lower time frame and buy to the upside. So this is high probability, while this is a little bit low probability. But it doesn't mean that this doesn't hold. This is also hold. Remember, low and high probability. So it's all about probability. So that's all. That's exactly what we are doing here. So you don't need to stress yourself. You don't need to worry about this thing. If this is not clear in higher time frame, move to another pair that is clear. And this process doesn't necessarily mean working daily. If you're also good with your structure mapping, you can use it in 4 hours. Look for 4 hours structure to be complete. Then the same thing, wait for 4 hours inducement, mitigation, then go to 15 minutes or 1 hour and buy to the structure. That's all. So that's extra tips that I'm giving in this video. So, but if you also have any concern or any this thing, just drop it in the comment section. I'll be glad to attend to it. So thanks for this video. Kindly like, share, and subscribe if you find this video interesting. So bye for now.